And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we like to bring you where the action is in the broader markets. And of course, as always, with an eye toward helping you formulate a plan of action or not going into not just next week, but beyond. We want to look further out, of course. So without further ado, let's go ahead and get started. I'll share with you what we are going to be covering today. As usual, we're going to take a close look at the broader markets. Where are we positioned at this point in time? A little bit of a bumpy week this week, but overall somewhat constructive. And then also turnaround areas amid bottom fishing. We did see a lot in the way of areas of the market that we're starting to see a pickup, not quite ready for prime time, but I am going to share with you some areas that are a little closer to really reversing those significant downtrends. Also, going to talk about an area of the markets that is recovery related as we go into this economic period of recovery, but it's not cyclical. Also, we're going to talk about high yielders, and there is high relevance to that, just simply because a study that was conducted showed that during periods when inflation is expected to increase, high yield stocks outperform. So we're going to look at names there. Also, earnings season is still happening. You may think that it's tapered off. It has indeed, but there are about 8 very high profile names that are due to report. There's very high relevance as to why I will be sharing those names with you. So stick around for that. Beginning, as always, we want to take a look at some of the headline news that really took the markets by storm, if you will. And first up, the Fed did release the minutes of last month's report. And there was wording in there that really sparked some worries that the Fed was going to reduce their generous monetary policy, which in turn would raise rates. We did see a sharp response there. Also, inflation and rate fears remain at the forefront. As you may recall, the prior week we got a very sharp consumer price index report, and then job openings remained quite high. So a lot of that fear did carry into this week. Unemployment claims yesterday, they fell again to another pandemic low. We did see factory orders of activity dropped in April. And then also going into next week, a lot of relevant information you're going to want to at least be aware of, and that is consumer confidence as well as consumer spending. We've seen a little bit of a decrease here, seeing if that's going to continue. Also, durable goods as well as core inflation numbers are going to be reported next week. So all of these are going to help guide investors. We're in a very tricky period here, unprecedented, and seeking answers, if you will. So that is the backdrop as it relates to the broader markets and some of those headline items that kind of drove the action this week. So as usual, let's go ahead and get started. We're looking at a daily price chart of the S&P 500 index. And this index, we can see that the bumpy ride that I mentioned, where that Fed news on Wednesday caused a market that already had been weak, if you will. The S&P 500 broke below that 50-day simple moving average, and then was able to recover to the point that we did close above this green 10-day simple moving average. So generally constructive action. However, you can see that over beyond this go nowhere environment, we've been in what I would term a bumpy period here. Again, just a lot of cross currents as it relates to economic numbers being digested. So overall constructive. The stochastics are below that 50 level, considered negative. They are certainly pointing upward. And then the RSI just barely up above that 50, but is in positive territory. So from here, we can go ahead and drill down a bit further. What I've done is populated you can do this very easy on StockCharts, where it provides you with a 2-month daily price chart view of the sectors that are within that S&P 500. So we have 11 sectors represented here. And I like to add this RSI. I want to see relative strength or strength on a relative basis, sorted by descending. So your stronger areas will be up here in that upper left quartile. I'm going to go ahead and update that, make sure we are up to date. And interestingly, what we can see here up at the forefront are healthcare, staples, real estate. I'm pointing them out because they are generally viewed as defensive areas. They're higher yielding. They certainly provide services and goods that are needed regardless of the economy. However, in this particular period where we are now, they are recovery related. And last week, if you did not see the show on last Friday, go ahead and take a look. We covered a lot of these staple stocks. I talked about why in the face of rising inflation, these staple stocks are poised to outperform. It has everything to do with their pricing power. And this week, we're going to be covering some other areas as well. Good to see financials appear at the forefront. Financials, of course, we did see interest rates were relatively flat for the week. They do respond to that, but this is a recovery area, cyclical considered area as well. But let's move down and take a look at some of these weaker areas. It's equally important to be on top of where which areas are not being favored at this particular point in time. We can see technology. Now, tech finally did come through. They were flat for the week. It's been a tough area, and as for those of you that follow the markets closely, you'll know it's all about inflation as far as interest rates as well. This area does not fare well, but take a look. We are seeing signs of a potential downtrend reversal. We have a higher low taking place here, just poised to turn positive on your momentum indicators. And for those of you subscribers to my MEM Edge report, you'll know that we have been dipping our toe back into tech because there is one area and then select stocks that have actually reversed. So this is definitely on my radar screen. I do like to or tend to favor growth, but only if the charts support it. So moving right along, another area in the very lowest quartile, this is consumer discretionary. We're looking at a daily price chart, and this has everything to do with that consumer price index number that came out last week or the prior week. So we are in a period where prices are being increased, actually pretty dramatically in some areas. So there is a sense that consumers may put the brakes on their spending. So discretionary stocks remain under pressure, led by home builders and certainly other areas as well. So there's your view of the sector. From here, I like to go down and drill even further, pull the curtain back even more. And what we have here are each of the major broader market indices. And then I've added the yield on that 10-year semiconductor stocks, software. I like to look at gold, and then also just taking a peek at volatility. It did spike a bit. We ended the week fine, and then biotechnology stocks. So again, adding that RSI indicator, descending. So I'm going to go ahead and update it here and take a look. This is another area that we highlighted last week in last Friday's show. Each of those stocks and areas that I spoke about are still relevant. So go ahead and take a look at last week's show. You'll see our what we uncovered as it relates to this move into gold. And I'm going to share with you, well, we'll get to that as far as one of the many reasons that gold is potentially coming into favor, certainly a safe haven area, and we'll look at that closer. And then moving right along, we can see financials were up there at the forefront. KRE is the S&P Regional Bank ETF. Industrials, this is quite compelling. I mentioned this in my MEM Edge biweekly report 2 weeks ago, the fact that the Dow Jones Industrial uh, Index has surpassed the other broader market indices year-to-date performance. So definitely a really underscoring the fact that these cyclical areas are really here for the near term at least to stay. So then from here, of course, we want to look at some of these potential turnaround. This is another MEM Edge report fan favorite because I have been on the lookout for a potential downtrend reversal in biotechs. And it's all about the relevance here for me is once these stocks do get going, they really can produce some outsized returns. So I have a very robust watch list in here, keeping an eye on this potential turnaround. And we can see we got this nice momentum black line up through the red. RSI is positive. We always want to be mindful of potential earlier downtrend reversals. And when they do fail, the good news is they fail rather quickly. We did not take a bite, if you will. We did not get into stocks during this late April period. We have other criteria that are needed to be met, not just a positive sector or group chart, but we are on the prowl, keeping an eye on those biotech stocks. Another area potentially turning. Now, these are, this is IGV, High Tech Software ETF, and we did take a swing here, if you will, for lack of a better word, and we were able to get some decent returns. However, more recently, as software broke down, we very quickly removed those stocks. So you just want to be aware of the dynamics and the potential. A lot more information has been revealed since this downtrend reversal. Very relevant economic data that really speaks to software. So go ahead and subscribe or take a trial of my MEM Edge report, and you will be fully informed as far as what we're on the lookout for and what's really behind the scenes as far as impacting stocks in various areas. So from here, I am going to take a brief break. As you know, we have lots more to cover, so we'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. As mentioned, I'm going to share with you an area of the markets that is recovery related, but not cyclical. So what we're looking at here is a daily price chart of the real estate sector. A lot of these stocks are going to be REITs, Real Estate Investment Trust. XLRE is the ticker for this group. And we can see it's already had a significant rally out of this March period. What I'm focused on now is this nice downtrend reversal that certainly can be taken advantage of. These real estate REIT stocks are, of course, all about the reopening, as certainly within the US, as companies are starting to embrace their employees coming back into their offices, and then other areas of, again, that reopening of the US is going to benefit some of these names. So I've gone ahead and cherry picked a couple of really prime stocks that we can take a look at. They also provide that high yield that we're going to get into as far as other areas. So first up in this real estate area is Alexander and Baldwin, ALEX. And this particular company is based out of Hawaii, but they do have representation in several areas that are picking up right now, agricultural, infrastructure, and then also commercial real estate. The company is on track. Instead of earnings, these REIT stocks, they report funds from operation, FFO, and analysts are calling for 356% FFO growth for this year for Alex. The stock does provide a nice 3.3% yield, and this is in line with that recent pullback where it is now back up above its simple moving averages. And then you do also have positive outside momentum indicators with your RSI and your MACD. So one for consideration. Growth prospects are big into 2022 as well. So another real estate stock that we can take a quick look at. I tend to stick with gold standard high quality names. SLG is definitely one, and that would certainly fit that bill. So let's go ahead and mark this particular chart up. And we can see, as many of you know, I am a big fan of these base breakouts. They can really lead to nice, significant continued uptrends. So SLG is focused on the New York City office space. And the company does offer a nice 4.8% yield. And we can see this nice, attractive base breakout poised to take place, and also positive momentum indicators that point to further upside there. Moving right along, another office and industrial related I wanted to point out to you is BXP. This is Boston Properties, and this particular company I talked about, Gold Standard, they have locations as far as their office, retail, and hotel properties are in prime locations: New York, LA, San Francisco, Boston, and they do tend to work with very high end as far as who their clients are: Microsoft, Google, the more liquid, bigger companies. And we can see that this week, BXP did break back up above these shorter term simple moving averages with nice outside momentum indicators, 3.5% yielder. Another name here that we can take a quick look at is Brandywine, and this is another name that is breaking out of this base with outside momentum indicators. They do a lot across the country: California, Pennsylvania, and so forth. 5.5% yield. Now, let me share with you how you can uncover the yield on any given stock. You'll just want to go down here to this area where it has chart attributes. Go ahead and check off full quote. And then from here, you can very quickly access. Now, this says 4.2, so it's a little bit lower, I'm guessing, because certainly this price appreciation is going to lower the yield. One last area I'd be remiss to not share with you among these REITs are these cell phone tower leasing REITs. So here we are with Crown Castle, and it's rather exaggerated, but it's in line with that stark move out of March, and then this downtrend or pullback recovery. CCI 2.9% yielder. A competitor not quite as large is American Tower, AMT, and we can see it also has recovered from that downtrend, a 1.9% yielder. But that's those are some examples of names within the REIT or real estate area that are coming back nicely from recent pullback. So let's talk about stocks. I mentioned to you rather down and out areas that are, or really quite simply just pullbacks similar to the REIT area that we just talked about. And one of the ways I like to get my arms around the markets in addition to looking at those sectors and sub-industry groupings, and this would go for you as well. It can be really helpful to have a list of ETFs that represent various really deep dive sub-industry groupings. You can do that with stock charts, and then from there, they will actually send you a daily or weekly report, your preference, and it will provide you with the performance of those whatever you choose. They will do it for a portfolio as well. But I find it really quite helpful as far as giving even more in the way of intel as to where the markets are, where pockets of strength may be emanating. We're looking here at one of the ETFs that hit my screen for the week. This is IHI, and it's a medical devices ETF. Now, I do follow this area very closely. One of my um, professional or actually asset hedge funds that I work with is devoted to medical devices, small caps in particular, but I, among other items, I do work with them in covering that area and then also helping them with their watch list for to identify buy points. But here we are. IHI had a very nice 4-week period here, very strong uptrend, and it did pull back, but more recently it appears to be reversing this downtrend. Let's take a look. The RSI just now poised to turn positive. This MACD is a little more work to do, but if we can get that black line up through the red, that's going to be another signal that we could be in the throes of a reversal of this pullback. So let's go ahead from here, take a look at some of the underlying stocks that are either close to reversing, up, that's not going to work, or have reversed their downtrends, just as an example, because what you can do from here is go ahead, just use Yahoo Finance or another service and ask for IHI, click the holdings button. They'll provide you with those top 10 holdings. You want to see now, why is that reversing? And then from there, you can just sort through the names. So here is an example. This is Stryker, XYK, in that medical devices area, in line with the group. So we can see very same dynamics. So certainly worth putting on your radar screen. Another stock in that ETF is Medtronic, very similar appearance. So we're a little early, but that is not a bad thing because you can see once this group gets going, there is a lot in the way of upside potential. Medtronic is due to report their earnings next week, so worth noting. A couple of other names here in that IHI ETF. This is Thermo Fisher. TMODHR is one that I like even better in the medical devices. Danaher. This company is very well diversified, but as it relates to medical products, they do have an area that is very involved with the vaccine rollout, and it's a global company. So we can see that after this significant run-up, it really just marked time, and we are poised to potentially pull back. And you want to see that after these stocks have these big explosive moves, you don't want to buy when these momentum indicators are at their peak, RSI overbought. So this is really quite orderly, precisely what you want to see so that you can have potentially re-enter that stock for another leg up. Last name, wanted to point out to you, still a little bit early, is Boston Scientific, but I'd say put these on your radar and you can see how they play out from here. Another ETF is Hack. It is the cyber security ETF. Big winner. Now, many of you may recall back here, we did have that one of the largest U.S. government cyber attacks on a lot of agencies took place here, and we did see a significant advance out of there in a lot of these cybersecurity software names. And more recently, this past week, Biden did commit additional funding to cybersecurity. So it is helping this particular group potentially reverse this downtrend. Let's go ahead and take a look at some underlying names that are in HACK ETF. First up is NET Cloudflare, and you can see we still have work to do. It's a little bouncy, and then of note, it is in the software area. But I like this fact that the stock did, this was a big winner on my MEM Edge report. We actually got in back here as the stock broke out of the space. So we were able to take not only advantage of this significant move subsequent to that cyber attack, we were able to sit through this pullback and then stayed with the stock into its February peak. So what I can see from here is the fact that NET is poised to turn around. So it is in an interesting position to possibly participate in this turnaround. So let's go ahead and move on and look at a couple of other names worth noting at the very least, putting on your radar screen. Here's Commvault, CVLT, again, a big holding in that HACK ETF. But take a look. This is something that really is, for my work, very critical. I want to see that the company, the stock, has the potential for a very big advance. And really, these stocks aren't going to go up on air. Very much they are going up for very sound reasons. It's all about growth numbers. So the company is a very solid grower. So here we are in peaked in price with a lot of these higher multiple stocks back here in February, but it really didn't sell off. It held in relatively remarkably well, and we are poised to break out of this space. So this one is more mature. We see these outside momentum indicators trending positively. So very interesting. One last one, the estimates have been revised upward following their earnings today. This is Palo Alto Networks. And again, a big winner out of that cyber attack. A little sloppy, but take a look because you're not going to be seeing this, or we haven't, a whole lot here recently where a stock reports earnings. In the throes of that, it gaps ups, big volume, and also it did come close to breaking out of that base at 370. So we like these volume characteristics, and then your outside momentum indicators are quite positive. So one other area, because I know I have other items that I want to share. This is the US Broker Dealer and Securities ETF, IAI. It's been in a nice uptrend, but again, this is all about pointing you toward that relative outperformance, relative strength. We can take a look at some of the top holdings. This is CME. This company is all about providing platform to trade futures. Futures have been very, very popular. That big move into a lot of those agricultural, corn and other futures areas. Goldman Sachs is a big holding in this IAI broker dealers. This has been a nice winner for subscribers to my MEM Edge report here. It came out with record earnings late last month. A little early on this. This is ICE, but it's all about trading commodities. Maybe put that on your radar. So let's go ahead, and I want to share with you companies that are due to report their earnings next week. And we're going to share the relevance as to why I am sharing these particular stocks with you. First up is WSM Williams Sonoma. You may immediately see why. Williams Sonoma came out with earnings back here at the end of March. Take a look. They were superior. This is that gap up on volume based breakout concept I talked about. The stock did extend its gains, but more recently has been really marking time. So when you see these companies, in fact, back here in November, a similar gap up based breakout WSM on earnings, I'm going to be interested to see it. It is certainly a stay-at-home type of stock. Another company due to report next week is Costco. The relevance here is because Target, a somewhat competitor, came out with their numbers this week, and the company reported 500% year over year earnings growth. Target did, and it just pushed the stock right into an uptrend. So you want to be aware of that. One other name that we can look at due to report is Dell. I am pointing this out because this stock, as well as Hewlett Packard, both came out with strong numbers at the end of February. again, it was a stay-at-home play as individuals continue to purchase these laptops. So I'm going to leave it there. Again, go ahead and use that link below to take a trial of my biweekly MEM Edge report. I also put out alert reports. I put out one in addition last week. And I also urge you to hit that like button if you like what you saw. See you guys next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.